I'm here with Steve Pagliuca, the founder and CEO of PAGS Group and a senior advisor at Bain Capital. We're on the sidelines of the Sun Valley Conference. Thanks so much, Steve, for joining me. And I know you've been a regular at this conference for several years, and you obviously have lots of experience across everything from investing in healthcare, technology, AI, sports. As you sit here today, how would you describe the mood among the business community right now?
Well, it's interesting. There's a boom going on, obviously, in AI that's affecting almost everything and turning from theoretical AI to physical AI, and actually robots being manufactured, attacking space, defense applications, healthcare. So I think we're looking at a 10 to 20 year run in the growth of deployment of AI into the global economy.
And there's obviously been headlines around lots of uncertainties this year, from geopolitics to whether the AI trade is overblown. How are you feeling about that? I mean, do you think it still has room to go? Clearly, you're optimistic about AI, but what happens from here?
Massive infrastructure build, which is driving everything, and I don't think that's a fad. I don't think that's overblown, and it's existential for these companies, the big seven companies. If they lose out on the AI race, they'll lose lots of business and probably be beaten by the other companies. So because of that, and because most of them, maybe with the exception of OpenAI, have huge cash flow businesses that can fund this will go on for quite a while. And we'll see the winners and losers in the next 5 to 7 years. But it's ratcheting through the entire economy, as I said, from physical AI to building the data centers to space, to new kinds of transportation, flying cars, a whole new world. That's one side of it. The other side is, yes, we are in a very difficult period in history. I think the most contentious since the Cold War. I grew up as a young kid right after the Cold War, where we used to go into schools and do air raids. We're now seeing the war break out, the hostilities with Iran, Russia, and that leads to a certain amount of trepidation and instability in the global economy.
And on that topic of AI, I mean, last year at Sun Valley, it seemed like it was the only thing anyone could talk about was AI. It felt like last year was the year when people finally started realizing the potential that it could have on everything from society to how businesses run. Where do you think the conversation how has the conversation shifted on AI since last year at this time?
I think it's shifted from training and building training models to actually, inference for AI doing tasks. So you're seeing AI revolutionize the way you do biotech, alpha-2 protein folding, for example, protein simulations. Used to be a very hit and miss whack-a-mole process. Now it's being done at light speed. That's increasing the amount of drugs that you can experiment with and simulate what it's going to happen with the human body. And so with the drug pipeline, there's probably $300 billion of drugs now that are going to expire in the next couple of years. The pharmaceutical companies really need new products, and AI will really enhance the ability to do that. It's helping with diagnostics. It's helping with looking at longevity and what affects longevity. Anything that you can put together multivariable analysis that basically is taking lots and lots of time by humans and researchers to do can be done by AI now.
I'm glad you brought up biotech because it's clearly been a really hot sector. There's been every other week, there's been at least a $10 billion deal, it feels like, with pharma searching for more innovation from biotech. And when you think about AI speeding drug development, are there biotechs already using it to, accelerate their path to market, or is it still a bit of a dream at this point?
No, they're definitely using it. We're still in the early stages, but they're using it. The protein alpha-2 protein folding thing's been used to look at effects of different peptides and combinations of peptides. And I think you're seeing a rapid transition to putting all these on databases and loading models with them and then seeing what simulations will do. And we couldn't do that before. And it's going to get even more sophisticated when you bring in the next 3 to 5 years, quantum computing. That may be the next wave on top of AI as quantum computing is starting to be cheaper and penetrate, and more and more companies are inventing new ways to process information.
I want to shift the conversation to sports because I know that's an area you have a lot of experience in. You've invested in everything from, soccer to baseball, basketball, of course.
Also in cricket, we invested in the IPL.
And cricket. Thinking back on, the past 20 years from when you first invested in the Celtics, what's been the biggest change around how folks are thinking about investing in sports?
Huge change. Back 20 years ago, 2003, 23 years ago, when we bought the Celtics, there really was no social media. Email was just starting to be used. The whole thing has really exploded globally. Now, you count fans in the hundreds of millions and billions versus the hundreds of thousands back 20 years ago because of the global reach of technology, communications, real-time updates. The consumption of sports has grown. Media revenues have gone up 20-fold, since then, and are still rising. It's the number one watched programming, globally, and there's a battle between old media and new media, the Googles of the world and the NBCs of the world, to see who's going to win out. And sports is one of the most coveted properties, and that's driven the valuations way up.
It's definitely been something that's helped the media companies, stay afloat at this point. One situation that's been getting a lot of attention recently is the sale of the Seattle Seahawks. Is that a team you would consider investing in?
That's a little far afield from me. Most of my activities are going to Milan and the East Coast, but it's an amazing franchise. It's got an incredible fan base, the 12 they call it, and a great field. So whoever buys that property, I think, is going to do really well with it.
The speculation at this point is that, assuming that sale does happen, it could fetch one of the highest valuations of all time. How are you thinking about, rising valuations in sports? What's the limit to valuations? What would cause them to peak?
I think maybe a diminution of viewership would cause them to peak, but viewership is going up and up and up. And again, that programming is very valuable to the new media and the old media because they want to get eyeballs. And so the viewership has continued to grow. Media rights have continued to grow. And then on top of that, it's become institutionalized. When we invested 23 years ago, it was mostly individuals owning sports teams. Now it's groups of individuals. It's also institutional money, people like Arctos that have funds that invest into the teams. So you're seeing an expansion of liquidity by more limited partners and by institutional players. And it's a very safe place to put money because valuations have never gone down. And they're very valuable businesses with lots of people that want to buy them.
Yeah, and you mentioned media rights. I mean, the ever-rising media rights deals have been part of what have helped valuations keep rising. But I'm curious, at what point you worry about media companies and the streamers pushing back on some of this pricing? Like, do you see that being a limit on how high this can all go?
Eventually it will be, but so far there hasn't been enough pushback because this is an incredibly important area for these companies to control. And the leagues have really experienced great commissioners with Adam Silver and Mr. Goodell and Gary Bettman. And they are expanding the reach of programming, streaming, different ways to consume content on Instagram, on TikTok. And so you've seen almost sensational demand for the product. And you're seeing technology changes with bigger TV screens, portable screens where people are watching in the morning and watching at night. So they really haven't had the ability to push back because there are more programming entities that want the content than there is content.
What about outside of NFL? Are there pockets where maybe we could start to see it get pressured?
So far it is not. All the sports viewing numbers are up, and the recently formed IPL has had record numbers as well. Those franchises are being valued in the billions now, and I think 5 to 10 years ago they were kind of 10 million level. So they've seen massive growth as well. So you really haven't seen any diminution yet. And
I know lots of money has been pouring into growthier areas of sports, everything from youth sports to pickleball. As a veteran sports investor, I mean, are there pockets that really excite you when you think about some of these emerging areas?
I think women's sports are very exciting. Caitlin Clark coming into the WNBA is a little bit like Bird and Magic coming into the NBA 20 years ago. Viewership is up. They're very exciting games. It's a fantastic product. Women's soccer teams used to buy them for $2 million, and now they're worth 300, 400, 500 million. So you're seeing a great expansion into women's sports. That's a fantastic opportunity. And then there are other niche sports like pickleball, like padel, that people are getting into and wanting to see on a streaming basis. And you can actually attack the market in a more organized fashion now, kind of one-to-many streaming. And you didn't have that opportunity before.
That's fascinating. Shifting gears a little bit to private equity, which of course you have a lot of experience in. There have been headlines over the past few years about how a lot of GPs are sitting on assets that they haven't been able to bring to market because they, maybe bought in at high valuations when debt was cheap. When do you see the floodgates opening on all of this? Because people have been predicting it for years, but we haven't quite seen them open yet. And M&A is humming in all other.
Well, you've seen
areas.
it open in biotech, certainly in an AI, in space, and many private equity firms in defense. Many private equity firms have invested into those areas. Bain Capital has had at least 3 very successful IPOs of Pagliuca, which was a company purchased 5-6 years ago by a fantastic team in Japan and the U.S. together working on it. That has gone from, I think, a $20 billion company to a $250 billion public company now, with a voracious need for inference and more data processing capabilities. Same thing with Bain Capital invested in Coherent 3 years ago. I'm on the board of Coherent, and that company's grown dramatically as well. And so for good companies, there has been liquidity opened up. The whole biotech sector's opened up as well. So you'll see it. But obviously the higher prices that many firms paid in the past, they're waiting for that right price to take it public at a higher price. And it won't be a floodgate. It'll happen over time.
I've heard a view that maybe the best days of private equity investing are behind us, and that if you really wanted to make it in private equity, you should have gotten in years ago. Do you buy that, or do you think?
That's really interesting to me. I've John Condon, who's a fantastic investor, when he was a young investor working with myself when I was younger, said he was really concerned that the best days of private equity are over, and the next generation you wouldn't have a shot at it. And now Bain Capital is 20 times the size that it was then. I think fundamentally it's a fantastic economic model because it really brings the ownership into the companies, all aligned. You're not having to publish quarterly earnings. You can take a longer term view. Private equity has really matured where all the big private equity firms add a lot of values to companies. They bring technology, they bring finance, they bring marketing, they bring digitization. So it's been a fantastic business model. I think it'll be a fantastic business model for the next 50 years. So I think that's way overblown. You're just looking at a temporary period and we've always had those in the past 40 years I've been doing this. There have been periods where the public markets are slow, there's less liquidity. But if you build fundamentally great companies, they will come out at some point and you will get great returns on it. And the private equity model is an exceptional model for doing that.
Thinking about the next 50 years, given how much the world seems to be changing, just day by day, what's your view on the best way to invest for the long run, especially because I know that's a big part of your focus with your family office. What are you excited about when you're thinking about that?
Yeah, I've always tried to bias my investments, both at Bain Capital and personally, into areas that I think will grow for a 10 or 20 year period. So when I started my career, I asked Bain & Company when I was a consultant, as I first started, I really wanted to work in technology and healthcare, which I thought back in the 80s would grow for a long time. In fact, it's grown even more than I thought it would grow. And it's been responsible for a lot of investment returns. So I'd always advise young people to try to look around the corner, look out in the future, what areas are really going to grow, because the rising tide, as they say, floats all the ships. So today you're looking at quantum computing, AI infrastructure, healthcare, still a huge problem, longevity. All those industries are going to grow dramatically and transform dramatically. And I think we'll at some point re-globalize. We've gone to this period where countries have really sucked back a lot of resources. But I think at the end of the day, this will calm down and we'll re-globalize and those areas will grow forever. So really growth has been our focus, certainly my focus most of my life.
Well, it'll be interesting to see
Sports as well,
sports
and all
as
the
well.
offshoots of sports.